was on the losing end of this trade today. ABBV was down 12.75 points, which equates to a 16.25% loss, with the shares closing at roughly $65.70 by the end of the day. I'd like to just take a look at both companies independently and then together and give you a little bit of my reasoning anyways and rationale why I think that ABBV continues to be a company we want to hold. Going into this particular deal, if we take a look using fast graphs, which is a graphical way to look at fundamentals of a company, we can see that the earnings line for ABBV, since spinning out from Abbott Laboratories in 2012, has grown earnings in 2013 from $3.14 a share to the end of the year last year to $7.91 per share, which is more than doubling of earnings. And over that same period, they've grown their dividend from $1.60 a share to $3.95 a share. So this is a company that really has on a strong growth trajectory and showing strong dividend growth. And you can see by the white line, this is current dividend growth, past dividend growth, or projected dividend growth. And the spread between the orange line and the white line is the reciprocal of the payout ratio. So currently, ABBV has a payout ratio of 49.4%, which means that they have dividend coverage of almost 51%. So this is a company that going into the deal today was trading on a PE multiple of about 8 times earnings, with expected earnings growth in 19 of 11%, 20 of 8%, and 21 of 9%. I think that the market has unfairly punished ABBV, and the stock was cheap going into this announcement, where the stock really was trading in an area of about a PE of 10 with the dividend yield in the mid-5s. But as of today's close, the stock is trading on a PE ratio of 8 at $65.70. If we just do some simple forecasting and we assume that there's no synergies, if we assume that there's no synergies as a result of the combination with Allergan, we would argue that if ABBV trades at a market multiple PE of 15 times earnings, which we believe that they should relative to this earnings growth estimate of 9 or 10%, this is a stock that has up to 70% upside from current prices. In the time that ABBV's been public, I think it's important to note that they've grown their dividend at a compound rate of 67.2% a year since 2013. Now, if we look at Allergan separately, we can see that during the years of 2006 or 7 until 2014, Allergan traded on a terrific growth trajectory, where they grew their earnings from $2.43 a share in 2009 to $13.98 a share in 2014. Since then, though, their franchise and new product introductions has really been limited, and they're really living on Botox, which happens to be their strongest product. The shares have, I would argue, got overvalued in 2015 when they were trading at 24 times earnings against a normal PE of about 18. And prior to the announcement of today's deal, the stock had traded down to a PE ratio of 7, down dramatically over the past 2 or 3 years. Yet the company has really sort of stabilized their earnings. Even though there's not a lot of earnings growth, the stock currently trades at about 10 times earnings, with earnings growth between 3 and 7%. They also have a small dividend with very, very strong dividend coverage ratio, with a payout ratio of only 17%, about 83% coverage, very low debt to capital of 23%. So some would argue, and many value investors, many hedge fund managers are in Allergan thinking that Allergan was an undervalued stock, lots of cash on their balance sheet, expecting better earnings growth going forward, or the ability to do an acquisition. I would argue that Allergan was a good value before today's purchase, and ABBV also was a good value before today's purchase. In listening to the conference call today with the CEOs of the two companies, it's pretty clear that they believe that there's significant synergies of roughly $2 billion a year by the early 2020s, and 10% earnings accretion in year one. And in addition, the board of directors of ABBV reiterated their commitment to maintain strong dividend growth, and that's a quote, strong dividend growth and continued stock buybacks. So if there's any synergies to be made in this transaction and any executional upticks as it relates to efficiency or better earnings, I would argue that ABBV is a much better value today than it was even before it announced this merger. So ABBV today sits at about $65.70. It looks like tomorrow it's already posting a little bit higher. We're going to give this stock a couple of days to settle down, but in this mid to high 60s range where we can lock in a 6.5% dividend yield, which I view as safe and growing in today's market, I view ABBV as an excellent opportunity for pretty significant growth in a market that is very expensive.